Real estate investing can bring big reward and big risks. So know your risks. Welcome to the Real Estate Risk Report, the show for real-world insight on real estate investment risk. Now, here's your host, Lance Pederson.
Thank you for joining the Real Estate Risk Report. I'm your host, as always, Lance Pederson. So today I have with me Ryan Daigle with Flywheel Equity. How you doing, Ryan?
I'm doing great, Lance. How are you?
Doing great, man. Good. So why don't you share with us a little bit about how you got into the real estate biz? How did you go from, Flywheel Equity not existing to, deciding to form Flywheel Equity? What kind of led up to this formation of the entity? I know it's a fairly new venture for you, at least in that iteration. So,
sure. Well, I'm a 20-year veteran of technology. So I started off in software engineering. I was a software engineer for the first 15 or so years of my life. Went into engineering management, engineering leadership. And the last role, I was the CTO for a startup here in the Raleigh-Durham area of North Carolina, which is where I live. And at the tail end of that technology stint, I had started looking around for basically alternative assets to the stock market. Came into real estate, as many people do, started off single family, quickly found that did not scale nearly as quickly as I needed it to reach my financial goals, and looked pretty soon thereafter to multifamily. Started off investing as an LP in several multifamily syndications, kind of got to lay the land, established some relationships with those operators, which let me see behind the curtain a little bit, gave me confidence that it was something that I myself could execute on. And kind of the pairing of both my personal goals, personal financial goals, and then also at that point in my career, ready for a change, all led to me starting Flywheel Equity to serve multifamily investments for me and my technologist investor network.
Got it. Yeah. So you sort of have a sub niche there with all your former colleagues and people, the technology guys, and that's great. So I think I just saw today, CrowdStreet came out with their report of the top markets, I think. And I believe Raleigh-Durham, they had number one. So maybe we start
Raleigh-Durham.
Tell me about Raleigh-Durham.
It's always a beast. It's been growing consistently well above national average for decades now. It's got a diversified economy. It's got academia, it's got government, it's got private industry, and within private industry, you have technology, you've got biotech, all the high-paying, great jobs that every area wants. Raleigh-Durham has them. And also between Raleigh and Durham, you have these two different areas that have very distinctive cultures themselves, but they're within a 20, 30-minute drive of each other. So for the most part, they're kind of considered the same area. So it's just a really diverse, interesting metro area. It has a little bit for everybody and a really, really kind of great runway ahead of it, even though we're, decades into its rise.
So what is the combined population then of that sort of metro area? How does it compare to Charlotte?
Charlotte, I believe, is definitely bigger. I think Raleigh-Durham combined might be sniffing around the million mark, and these are numbers that vary depending on if you're looking within city limits or the MSA itself. But it's I would say around a million, maybe low million for the whole MSA, which is slightly smaller than Charlotte.
Yeah. So for you then, is that your box? Are you sticking to multifamily? What's your mandate? What is it that you're out there? You wake up in the morning. What are you hoping to find in terms of deals?
If I could wake up in the morning and find a 50 to 120 unit in Raleigh-Durham that I thought was good value, I would be all over it. Unfortunately, that last little qualifier there about good value is the thing that tends to not be that easy to find. So Raleigh-Durham, Charlotte, all these metros here in the Southeast and the Carolinas specifically, the secret's out on them. So all the big boys are shopping around here, really low cost of capital, really big pocketbooks, really great appreciation over the last several years has resulted in it very hard to find what, by my estimation, would be considered kind of good value. And so what I've been doing recently is looking more in the Triad area, which is Greensboro, Winston-Salem of North Carolina. It's basically right in the middle of Raleigh and Charlotte. It's a little bit more blue collar, a little bit more of a steady grower than a Raleigh or a Charlotte, which has, high upside. but as a kind of stable but still growing market, it's pretty strong, and you're able to find a little bit more value there as well.
Got it. Yeah. So that's because I mean, that is a bit of the issue. I mean, these hot areas, and then everyone's out there looking. And I mean, what other ways you can combat that as sort of an emerging sponsor? I mean, an emerging operator, like someone, like you said, you were invested as an LP and you kind of felt it out. I mean, do you feel like how hard is it? Like, how hard is it for you to sort of, is it discouraging? Like where you're like, you find something and then it's just someone else.
You're kicking me while I'm down, Lance, man.
Yeah. Well, I don't know. I'm just curious, right? Like it's, cause this is what happens, is that if everyone and their brother like thinks, multifamily is great. And then not only they think multifamily is great, they think that the markets that you're trying to operate in are also great. How a little bit of real talk. Yeah. It is discouraging at times. When you see what people are willing to pay for properties and you, whether they're right or wrong, you just don't understand how they're able to do that. It can be really discouraging. You don't feel like you've got a competitive advantage in any way. So I think one thing for everybody to keep in mind is no matter how good you are, no matter how much money you have available, it can take a long time to really build up the necessary machinery, processes, relationships in any one area to where you're getting somewhat consistent deal flow. So, you're not just going to put your shingle out and be able to be transacting in a market that quickly. So while it is discouraging in the short term, I do believe that in the long term, continuing to build relationships, doing transactions where I can and putting my best foot forward, so that those are positive experiences for the brokers and the lenders and the sellers that I'm working with, then in the long term that will pay off. But also you can't be stagnant as a business either. So, looking at other geographies, as far as, looking at Greensboro versus Raleigh and Charlotte, the areas in between, maybe you go to some smaller markets, maybe you broaden your geographic footprint and how far you're willing to drive to scout out properties and to asset manage these things. You always have to be adjusting. You're an entrepreneur, right? You might be in real estate, but at the end of the day, you're building a business and you need to kind of strategically be looking at what hurdles you're facing, what are potential solutions, where your value as an operator is, what your mission is, how it all relates, and what your next move is. Yeah, and the reason I bring it up, not to kick you down, right? It's trying to help, those truly passive investors who really have no interest in getting in, to really understand how challenging it is, especially for the disciplined operator sponsor. Right. Because that's usually what it is, right? Is that the good ones are disciplined. So they're going to have criteria, and it has to meet that criteria. They're not going to be willing to overpay for properties just to do a transaction. And so when, I think this translates directly to like acquisition fees, right? The fact that the sponsor gets paid an acquisition fee, it's not just the fee is covering costs and time, blood, sweat, and tears that occurred months before that, more often than not.
Yeah.
Right. And so it's because, I get it. Like I've got guys on here they do have proven track records. Like say that out loud and it's legitimate. Now, on Verivest, we go beyond that and we actually will verify that indeed is a proven track record. And of course, they always go back to that point. They're always quick to point out, how extensive their track record is. And that is a differentiator why an investor should choose them over someone else. And so for me, I look at it a bit differently, right? Is that as a passive investor, it's to understand that you got to kind of look beyond that. Of course, it's great. And it does obviously de-risk it a bit when someone's done it. So I'm not discounting that either, but I think that it does come down to being willing to build relationships with those that don't maybe yet have an extensive track record, really to dig in to figure out what they're made of, right? Because partnering up at times and getting in and getting involved with someone that's, emerging can be really, really fruitful. I think that oftentimes the economics can be more favorable, right? Because someone that, they're looking to do deals and they're willing to really share and demonstrate that, that they can do this, right? So it's to not overlook, and especially now that we've launched this directory, we've got all these sponsors and those things. For me, it's like, that's just don't overlook the ones who look, maybe smaller or whatever, because those are the guys who are figuring out ways to go and discover value. Maybe it is you have to go to other markets or whatever. That's not bad. That's not bad, right? Once again, you assess it and do the underwriting, and on a risk-adjusted basis, you can figure out how to drive value. Those can be really great ways for passive investors, and obviously guys like yourself, to do transactions that can generate good returns. So
I wish passive investors understood, and maybe they do, but I think it's somewhat obscured. I wish they knew with typical syndication structures how incentivized operators are just to transact.
Yeah.
Right. So, and I've done acquisition fees before, so this is just how the industry is. But upfront, you get an acquisition fee that's basically covering your cost of business, your salary, whatever, right? But then for the most part, unless it's a really solid deal, it's cash flowing from day one. By the time you cover your hurdles and your prefs and this or that, you're not seeing, as an operator, you're not seeing a lot until you sell, right? So it's like upfront, you get your acquisition fee, and on the back end, when you sell the asset, you get to recoup from the appreciation and kind of get your split of the equity there. So all of my compensation is based off of the cash flows from the asset itself. And I'm sharing from hour 0 to hour whenever the sale is, I'm sharing alongside my investor. So no acquisition fee, no capital transaction fees. That's kind of my utopia of where to get to with perfect alignment with my investors. I'm not there yet. I'm not saying that's what I'm offering, but that's how I'm thinking about these things is really, what does true alignment look like? And frankly, I don't think the default is in true alignment with investors.
Yeah, and I agree. And it's alignment is fun to talk about, and I think it should be talked about. But it's hard to have something that's truly perfectly aligned just because of the way that it works. So, and that's why I always like to bring up is that it's like these things are there, and I think the good news is, to your point, like there are guys who do just transact to transact. In my opinion, they're pretty easy to sniff out. And you spend any amount of time with them and you just look at their activity and how they've done it, that it is a legitimate question. I mean, if you see them doing, tell me what you could identify, put yourself in an LP's shoes when you're looking at an OM. What are the flags to you that's like, oh, these people are really in it just more for the transaction than for the long-term benefit of everybody? Yeah, well, I guess what I would look at is the frequency of transaction, right? So one, it's like, what have you done? And then I would look at what markets are they in, like that they're winning those deals in, right? So if you see those sorts of things, I mean, and I guess it's just through the discussion of like how they're structured and what they're doing, you can kind of pick up on that. I mean, I guess over the years, to me, that was always very obvious. Like, wow, so you're in this. And that's why I like to talk about how competitive it is and bring this up, like of how those who are patient and disciplined, they're saying no, they're having to fight the urge to go higher, right? And so I guess to me, it's not actually in the OM, it's in the discussion. Like, give me an example of the deals that you guys turned away, or what is your specific criteria, right? So it's more of in that sponsor level due diligence up front, like saying, and I guess that's my question is always like, what is your criteria? How do you decide whether a deal is good or, is good or not? And I would expect to hear a question. I expect them to say something to the effect of, okay, well, here's how we look at it. We're underwriting to solve for this. If the transaction doesn't fit that, then it's a no. It's that simple, right? Mm-hmm. So if we can't get this and it doesn't meet this criteria, then we don't get to transact. So when we do the underwriting and we dig into it and it doesn't meet it, it's basically just blown out, right? So if they don't have if they don't share their version of that, it would make me nervous. I mean, it does make. I mean, like, so what's the method to your madness? Like, how do you? That's why I would say, like, how do you know what you're looking for? It's one thing, I get it, to like go further afield, maybe in the areas that you're looking for deals, but it shouldn't necessarily. It should mean that there's a corollary sort of. Okay, well, a tertiary market I'm going to expect to get more. Like I need to be compensated for the risk of the lack of liquidity in that market and, those sorts of things. And so I just think those are the conversations that passive investors should be having with sponsors. Like, what is your philosophy? What is your methodology? How do you decide if it fits or not? And if they're sort of like, don't have a great answer. And it also seems that there's a lot of transactions sort of stacked up. Like I would just be suspicious, especially in times like now, when they are finding a way to do a bunch of deals.
I see some operators that are able to bring several deals a quarter in, and I feel like that maybe speaks more to their ability to raise money than their discretion as deal finders. And maybe that's my jealousy talking, right? But it's very hard for me. And I'm on the smaller side. So I have 80 units under management now. I'm looking for something between 70 and 120 units next. So I'm definitely not a big boy yet by any measurement, but I'm trying to incrementally build the business, do it in a low risk way, do it in a very transparent fashion, and kind of build up to where I am able to, to consider some of these larger assets. And when I'm out there looking, I mean, if I close something in the first half of this year, it's 2021, like I'll consider that a success, right? So I could see one this half, maybe even just one this year. Like my expectations are pretty low just based on what I'm seeing. So, I don't want to disparage just because an operator is really good at their job and they're able to do multiple deals a year, that alone is not a bad thing. But I know that it is very difficult to consistently find quality and value out there.
Yeah, no, and I'm not suggesting that either, right? It's there's a lot of moving parts there, and ultimately, as an investor, as a passive investor, you sort of have to be able to read between the lines and figure out how they're doing it. Because once again, if they do have a very robust acquisition, like they are doing lots of acquisitions, they're very active in markets that are hot. If then I would expect to have a really awesome acquisition system that they put together, right? Like they should be saying things like, we started doing this X number of years ago, and we do this, and we've got brokers, and we do lunches, and we do there's just tactic after tactic after tactic after tactic that they're basically have implemented and are executing on that just create crazy amounts of deal flow, right?
Yep.
And because we've had guys in the past who say, well, yeah, I mean, yeah, I've got this deal today, but do you realize I've literally been calling that owner? So my whole strategy is identify properties I want to own, and I just wear them down, right? Like I just am relentless, and until they, I lock in, and that's my strategy. Well, okay. Well, if you did that and you started that, and now it's sort of the compounding effect of that activity that started years ago is taking hold, then, that's great. But it's just, the story matters, I guess, right? Everyone's story matters, and being quick to judgment in this business on any of this stuff is probably not wise, right? You need to understand where people are coming from, where they're at, and there's just always more to it. And if there isn't a good story, or they don't have a story, then I would be, I'd be suspicious. I guess.
The story needs to match the results, right? If they show up in a new area on year one and are doing 2-3 transactions, unless their story is pretty compelling of how they're able to do that, then, you may want to pause. So yeah, that makes sense.
So for you then, let's talk about that. Like, as you build out the team and sort of with all this said, we're basically saying this is a long game, right? This isn't a get rich quick sort of business, right? And so it does take, passion. But for you, maybe we go into more of that, like, okay, the why behind Flywheel Equity. Like, I get it. You were in tech for years. I mean, similar to me, like I was in tech and whatever, and, we're still kind of tech, but I then got into sort of the investment business, seemed to make sense. Like, hey, that's a better place to be. But so for you, what was sort of the why? What is Flywheel Equity's why? Like, why do you exist? What are you trying to do with it?
We are trying to make real estate more accessible to normal people, right? So right now, real estate is very much geared towards the ultra wealthy, even in the syndication space, which has done a lot for kind of democratizing real estate and access to commercial real estate opportunities. There's still very much a skew towards accredited investors and investment opportunities that are specific to those. And so, from my background in tech, a lot of technology workers make great income. They may have a large portion of their net worth tied up in a single company's stock, whomever their employer is, through RSUs and options and other things. And so real estate is a really great vehicle for them to diversify, for them to get tax benefits. These people also tend to really be analytical in nature, and also want to have access to information. Right? They don't like to be sold to. They just want raw information that they can then come to their own conclusions. And so Flywheel is really trying to cater to that type of person through education and transparency. And through that process, make real estate much more accessible to people that, maybe are curious about it, know it exists, but don't know how to get started. And if they do get started, they are going to want access to a lot more information and a lot more data than just a single 30-minute sales call and then, write a $50,000, $100,000 check, right? They need a lot more assurance and raw information from which to make their own decisions.
Yeah. So that's kind of where the transparency piece comes in, is that in order to win those guys over, you have to be transparent. It's a non-starter. They're not going to ever be in the dumb money category where they just like fall in love with the pictures.
Yeah. And, they want to understand how their money is working for them, right? As engineers, we're always breaking things apart, understanding how they work, rebuilding them, building something brand new, from the ground up. But that is the act of creation and the act of understanding everything about that. And so the same criteria that, they apply to their investments, they want to understand, okay, real estate, I've heard it's great. Why is it great? What happens when I send you my check? And so what we do at Flywheel is we really open everything up to the investors, right? So we give them access. I know this is something you're passionate about at Verivest, but we've kind of taken the Verivest approach, but internally. So we, all our monthly reports, our financials and property management reports, our individual dashboards that we have on our properties, that's all accessible to all our investors at all times. We also have a Slack channel where all the investors are in. So if I'm out at the property, see some work being done, rehab, I can take a few pictures, drop in the Slack channel, add some comments. That really kind of granular level update that's too granular to be in a quarterly, newsletter update. But it still gives comfort. It gives peace of mind to the investors that, that this is an actively managed investment. Somebody's always at the wheel. And there are opportunities for me to ask questions that maybe I wouldn't want to in some other format, or it's just popped in my mind now. I don't want to have to hold on to it. And I've got a direct channel to the operators, to the asset managers of this thing. And then we also do quarterly reviews and Q&A style webinars that give people yet another channel, another opportunity to kind of ask their questions and see what's going on.
Oh, I love it. I love that. Of course, I love it. Yeah, it's great.
I'm talking your game at this point.
Yeah, you're talking my game, man. But because maybe it's easier for me to, being sort of a techie as well. That's sort of the natural. Like, of course, why wouldn't you do that, right? Like, why wouldn't you just make it easy? But of course, what you just said is not common. Right. People view that as that's intrusive, and that's like, oh my gosh, if I open that up and did that. Now, I don't tend to believe that would be true. I think their fears are unfounded, that if you have that level of transparency, that people are just going to, bug the crap out of you all day long. People got their own lives. That's not what they're interested in. But doing what you do, it gives them peace of mind, right? And it allows them to feel like they're a part of it. And the ownership goes at a deeper level. And so have you found that? Like, it's not like people are like just going nuts in the Slack channel, asking every little thing and trying to convince you to do, change your strategy, and right. And they're not doing that.
No, not at all. You get well-informed, curious questions like that. That's exactly like, I want to be educating people. I want to be showing them the details, the specifics of their investments. So it's every question I get, I'm excited to answer. I don't feel nobody's nagging. Nobody's not asking questions in good faith. Like, if anything, it fosters a tighter sense of like a single team working towards a common goal. It's not, GPs versus LPs, where LPs are being annoying and asking stupid questions. It's the exact opposite. Like, by being curious, I understand the needs, the concerns of my investors, where their minds are at, what they're unsure about. what they're nervous about. And so it's like understanding your customer. That's a big part of what you're always driving towards in tech. And I think it applies just like transparency applies beyond tech. So does having that customer first mindset. It absolutely applies to real estate as well. So I very much value the relationships and the sense of team that being this transparent actually fosters.
Yeah. So to back that up then, are you like lowering the minimums then? Like what's the minimum to get into one of your syndications? Is it lower than 50? Is it something?
So what I am structuring now and kind of spinning on, so love your feedback. 50K I think is a reasonable minimum to publicize. But I think what I also want to do is keep a few slots open, call them opportunity slots or whatever, for people that maybe don't have that amount of liquidity, but are clearly very much interested in the space. Maybe they've got some other aspect of their story that I feel like it's pretty compelling to give them access to this type of opportunity, and would be willing to lower the minimum by a lot if it's something that I feel like could really help them out, or they've really shown a lot of motivation towards. This is something that I used to do in technology, where I would work to get people that were underrepresented in tech or didn't have access to the types of opportunities that other people did, to provide them some pathway into technology. And so I would like to take that concept over here in real estate as well and provide some path, even for people that don't have, don't quite have the means yet. Because how are you going to build that type of wealth? If I think real estate is a great wealth building tool, it's kind of a circuitous reference to expect somebody to already have the money to then ask them to build the wealth, right? So I want to break that chain and provide people a better on-ramp.
No, I agree. Yeah, I love that too. So with that said, then are you structuring these, or is your intent to structure future, like is 506B to allow even some non-accredited investors in? Yeah,
absolutely. 506B. Yeah, I'm pretty committed to that because again, everything I just said applies to accredited versus sophisticated as well.
Yeah, no, I agree. And this is one of the things I'm trying to, as much as I, of course, love what the Jobs Act did. I mean, we checked the 506C box like the day we could for our fund. I think it is important for investors to understand that for reasons like you just said, maybe that's not many people's reasons or rationale for doing it, but a lot of these things are that, because it increases the barrier. Obviously, you have to then verify the accredited status. So it's additional friction if you go 506C, right? But just understanding that if you don't begin to build relationships with sponsors, you need to understand that you may never be aware that opportunities ever even existed. And because I think that, and of course the techie in me too would think that everything's just push button and I can see the whole universe of things. And and yeah, that sounds cool to say out loud and to kind of envision it that way, but we're not there yet. And I'm not sure how long it'll take to get to a point where that happens. But the way it works right now, it's still, even though it's being done online, it's many of the times, right? Meaning the investors aren't always in the area that, they're not your neighbors or something. I mean, some of them might be your neighbors, but many of the people might live in other places. It's just understanding you got to build a relationship. If you like what Ryan's saying right now, what Flywheel Equity's doing, if Ryan doesn't know you exist, then you'll never know when he does find a deal. When he demonstrates his discipline daily, and when he finds a deal, you'll never even know that he had a deal until the deal's done. And that's with our directory why we flipped it on Verivest, to say it's all about the sponsor first. I mean, yeah, some people have deals, some people are open to using 506C and whatever. That's fine. I'm not judging it one way or the other, but it's just to know that's only a small segment of what's probably really going on behind the scenes. And it's all relationship driven. And if you don't start that relationship and you just lurk and never reach out and touch someone, don't be surprised when you may not realize this, but you might be the dumb money that's going into a deal, right? Like,
that's definitely been a hurdle that I've had to work through with both my own personality, but then the people I'm trying to reach being engineers, technologists. Like, they are not the people that want to say hello on LinkedIn or get on a call. Like, that's the absolute last thing that we want to do. But it's an important part of the process, right? I, as an operator, have to vet your level of sophistication with these types of investments to make sure that it's, you're not being taken advantage of and you're capable of making your own decisions. And I can absolutely help in that process, right? I mean, big part of what I see my job as doing is educating investors, whether they choose to invest with me or not. So, but to your point, it starts with me knowing that you're out there and somewhat interested to even start that process. So reaching out is always the first step, and, email, whatever the easiest way is you got to make that happen.
Yeah. And that's why I think by educating first, it works better anyway, right? Because like you've got your sort of persona nailed down, like, who you want your LPs to be, technology people, whatever, right? So you know how to speak to them because you are them or were them, and then educating them and speaking their language, especially to show them, hey, here's how I basically underwrite a deal. And you open an Excel and you're, doing those things and teaching them what you do. It's super powerful. I mean, that will resonate with them, because then they'll go from being ignorant to enlightened and feel comfortable. And you're the guy who taught them how to do it. And, it doesn't mean they're going to run out and try doing it on their own, right? At some point they'll be like, okay, great. I get it. I know enough. I understand how to kind of pick these things apart and ask good questions and those sorts of things. But fundamentally, I'm not interested in chasing deals and doing all the hard work that it takes to, do what Ryan's doing, right?
Yeah, that is the last of my concerns, is that I'm going to spend all this time on somebody and they're just going to go be a competitor. That's not at all on my radar.
Yeah. Some people it is though, right? Like that's what stops them from educating and doing those things, because they think that that's what's going to happen. And, it doesn't, but it definitely helps them become a more educated consumer, and you can kind of build it that way. So for you then, I mean, have you ever contemplated, there's a lot of this sort of co-GP type activity going on. I mean, have you ever contemplated, obviously you keep trying to build your own, platform in terms of, doing your own deals and operations, but have you contemplated just, maybe, co-GPing with other people that you raise money into? Is that something that you've thought about at all, or?
Yeah, I've definitely thought about it. I've decided against it for the time being. So I want Flywheel Equity to be the asset manager, to be the operator. That's the only way that I feel like I have any credibility when I go and speak to investors and try to get somebody to buy into a deal. Unless I know all the intimate details about the deal, and at the end of the day, am going to be the one responsible for making that deal succeed or fail if I failed, right? I want to have that direct relationship with the investors and the direct relationship with the asset itself. So when there are too many parties in between my investors and the deal, that just makes me a little uncomfortable. And so that's why I'm focusing on the operational asset management aspects of it. Now, keeping it all in-house means there's more work for me to do, right? I'm not just talking to investors or just trying to find deals. I'm trying to do both, and do both in a way that they are matching up timing wise, right? Yeah. So that makes my job a little more difficult, but it's the way that I feel most comfortable doing business. I have spoken with, and I think in the future we'll be working with other people that raise capital. So yeah, I think it's a very valuable aspect of the ecosystem. But I want to make sure that they're people that I trust, that I understand how they're doing business with their investors, what they're conveying to their investors, because I'm kind of assuming that liability when I bring them in. So it will be a small circle of operators and raisers that I feel very comfortable with and how they do business.
Yeah, no, I think that's well put. Another thing to understand, right, is that this is the activity, and for me, seeing it, it's like it's a trend that's happening. I'm trying to encourage it. It makes sense, but everyone has to sort of decide who's going to be the operator. Are you an operator? And it's like all these things we're talking about. There's no right or wrong answer, but it's just, you're looking for, because what I call like what's just happened in this 30 minutes we've been talking, right? It's like Ryan has conviction, right? He's thought about things and he's made decisions, right? It's not to say you won't change your mind, but at this point you contemplated it and you said, this is what I'm doing. I'm going to be an operator. It is hard. It is discouraging at times, but I'm going to keep going, right? I'm going to find stuff and we're going to build up the business this way. And yeah, it doesn't mean that, hey, you go find other people who are really great relationship people who've got a tribe or a following of folks, they understand, they build a relationship with you. right? And then they tilt up some, special purpose vehicle or, that's going to then allocate into your deals or whatever. I mean, that's great. In fact, that makes it easier for you to grow and scale your business if, and I'm hoping that we see more and more of that. And obviously it's easy for me to say coming from, a role where we sort of have been that middleman, they'd kill me if they heard me call us that. But I mean, at the end of the day, I feel like there's value being added by even those people. You come in, you educate certain private people and, you plug them into opportunity.
I think one thing I wish we did a better job of in the industry was a little more clarity around, when you say I'm a GP or this is, let me raise for my deal, what exactly that means. What exactly is your role? What exactly is your percent ownership of the general partnership? What is your day-to-day responsibilities? How much visibility are you going to have? So I do think that there are some capital raisers that give the impression that they are the operators basically, or they do very little to make it clear what their role is, and that can give the wrong impression. But absolutely, the people that are doing it right, that are being very upfront with the value they're providing, those are absolutely the type of people you want to work with.
Yeah, I agree, and that's kind of the stuff I'm hoping we can do our part to help clean up. Is just, I think a lot of it just born out of not having the right vehicles or tools to do that, right? And so, it's sort of, hey, there's nothing wrong with it. And maybe being a little bit insecure about that position. I think, and I know for us, having been guys who did that, we spent, I don't know how many years it was sort of trying to defend the fact that, yeah, it may appear as though there's double fees or something like that. Because we were doing the same thing. We go in and say, well, we've got a fund that we've raised money into, and then we're going into a deal that's being operated by somebody else. But we always would basically cut enhanced deck. We'd get better economics, right, to account for the value we were bringing to our investors. So there's still value being added, because building net new relationships with every Ryan and Flywheel Equity and whatever, and being able to do that, it's not easy. Not to mention that you can, like you're committed to having a lower minimum, but in many cases, that's where the sort of feeder vehicles or whatever that go into these deals, it can make it easier to even lower the minimum further to get access. So yeah, I think just educating, like you said, around that and letting people be more comfortable with the role they play, and then let everyone be more transparent about what that role is. And, is a big thing we need to do to keep this thing rolling.
Yeah. You've got to find your voice. You can't be out there feeling like you're hiding some aspect of your business. At least this is my personal feeling. Obviously, I'm pretty big on transparency, but, I'm a small operator right now. 80 units under management doesn't sound like a lot to a lot of people. I'm not going to hide and try to act like I own hundreds of units or, actively manage hundreds of units. That feels disingenuous to me, and that gets you nowhere. So instead of feeling insecure, which we all do, instead of trying to hide behind fancy marketing or language or however you're presenting yourself, embrace what some might see as flaws or places that you're not yet, but are trying to get to. Embrace those gaps and use them to your advantage, right? Like, so my commitment to transparency, I'm basically taking all the big guys' scale and using it against them. They can't afford to have the relationships that I can with individual investors. Mm-hmm. It's central to what I do, but it's also a benefit of how big I am right now. And I'm committed to keeping it that way. But, I'm going to use where I am now in my growth curve to my advantage. So really, think about turning the things that you're insecure about, find a way to turn them into something that you feel really confident about and that you feel really speaks to your message and your values.
Yeah, I agree, man. Amen. Yeah, this has been amazing. So this is really good stuff, and a conversation that had to happen, right? This needs to be talked about more, and of course, I'm committed to having that conversation. I'm glad to have met you. So where can people find you, Ryan? How can they learn more about Flywheel Equity?
Yep. Go to the website, Flywheel EQ. That's EQ short for equity, flywheeleq.com. Got the sign up page, contact information, all the stuff. I'm also pretty active on LinkedIn and Twitter. So happy to reach out there as well.
Cool. Thanks so much for your time. I really appreciate it.
Thank you, Lance.
All right. Take care.